Hello and welcome to this Forex Preview at xm.com. I'm Maria Bashardis, and joining me is investment analyst Cristina Parthenidu. We'll be discussing the U.S. non-farm payrolls report due out on Friday. So Cristina, as widely expected, the Fed decided to cut interest rates for the first time since the financial crisis. But once again, it did not sound very worried about the U.S. labor market. Could July's non-farm payrolls report confirm the strength of the labor market?
I would say very likely. I mean, July's jobs report might not be very exciting at the first glance, but could still point to a healthy labor market. I would expect employment growth to slow down to 160,000 after rebounding by more than 200,000 back in June. Moreover, the unemployment rate is expected to hold steady at a 50-year low of 3.7%, while more importantly, the wage growth is also projected to stabilize around 3.1%, which is weaker than the February's high of 3.4%, but still among the highest rates reached since financial crisis. So overall, the U.S. labor market is likely to hold strong, but the real question is inflation, which despite the low unemployment rate has been repeatedly undershooting the Fed's 2% target over the past 5 months. So that's one of the main reasons why the Fed decided to cut interest rates this Wednesday.
But this might not be the only rate cut this year, is that correct?
Well, the Fed left the case for further rate reductions open, saying that it will be closely monitoring economic and political developments inside and outside the U.S. before taking any decision. However, it's also mentioned that this is not the start of a rate cut campaign, but rather a move to get the economy through a period of uncertainty. So I think what the Fed tried to say is that if global risks such as trade tensions between the U.S. and China escalate further, it might deliver further rate cuts in the future if, of course, economic indicators such as inflation and GDP growth turn lower.
I see. And finally, turning to the dollar, it managed to stage an impressive rally following the Fed decision. How do you think markets will react to the upcoming non-farm payrolls report?
Indeed, the markets were pricing a more dovish behavior, but the Fed didn't deliver it. And therefore, we saw the dollar rallying. Now, about the Friday's non-farm payrolls report, the data could be a stepping stone to September's meeting, when the policymakers state their own rate projections. So if the data come better than expected, signaling a less dovish policy meeting, we might see the dollar rallying once again. Otherwise, if the data come below expectations, suggesting that a rate cut could come as soon as in September, dollar-yen could shift back down to its 50-day moving average.
Cristina, thanks for joining me, and thanks for watching at xm.com.